All right, welcome to another episode from the Chart Reader. So it's been a bit since I've looked at the sector, but we will look at the big tickers, right? We'll look at Tilray, CGC, HITI, SNDL, MSOS, and ACB on this one, all right? And look, the last time I made the video, roughly speaking, we just saw ACB bring really good earnings, right? And my thought was, hey, ACB, good for it, obviously, right? My concern was this wasn't going to be strong enough to actually carry the rest of the sector, right? Because you know me, I sincerely believe if one ticker, and it's a big enough ticker in the sector, can do well, it'll bring everything else up with it. That is what sector strength means. Obviously, the opposite, if it does poorly, bad things happen, right? My thought was, look, if we could compound ACB with some good CGC earnings, which was right here, oh, I really believed good things would happen. And I mean, you can see the setup we had, right? And obviously, I'll talk about these details shortly after these opening thoughts, right? But setup was there. We were at the 50. We got back to the death line, and lo and behold, the earnings reaction. Look, you know me, I don't really listen to earnings. I'm not here to have human opinions about the earnings. I'm here to see what the market reacts to it. And generally speaking, it either continues that way or it doesn't. And yeah, ACB with a hard gap down, and lo and behold, we're basically 50% from that peak that we were at, right? The interesting thing that I know is catching a lot of people's attention is this Tilray chart right now. All right. And look, you know me, I'm a daily and weekly guy. So when you look at the daily, this actually isn't too bad. When you zoom into the details, everything happened in a single 15 minutes. All right. And then when you go even closer into the details, it actually was only a what? Let's call it a 2.5 minute moment. And then from there you see the last of the reactions, right? So on the daily, it for sure looks like big volume. I see the MACD, the RSI, interesting little candle and doji. And I'll talk about all these details shortly, right? But I'm I think two things. Number one, and hey, look, I'm not saying I'm right on the Discord. I know someone was talking, I think it was Cole, if I'm not, yeah, look at that, right? Talking about shorts are covering, like there's different ways you can spin it. To me, I think I'm still gonna need just a little bit more before number one, I react on a daily, and then number two, let alone, confirmation in my basic things, right? So, I think the last thing to say on the opening thoughts before we get into all the details, look, the market's getting a little tough. All right. Dow Jones with a real hard back to back. We gap down and actually go down. We're now below. And obviously, this is just the first candle under it, right? But we are actually below 4 of the 5 moving averages, with the fifth one all the way down there, right? This looks tough, right? S&P 500, that's a horribly devastating single candle right there. That's a monster big percent. I know it looks small relatively speaking, but yeah, that's that we should only be at 0.3 up or down, not almost 6x that number, right? But almost losing 3 moving averages for sure right there. And then NASDAQ as well, right? Obviously, I care a lot less about NASDAQ when we're talking about weed stocks, right? There's not a lot of technology in this thing, but we're seeing the indices get a little scary, okay? I think there's two ways of thinking of it when we're talking about weed stocks. Baseline, just fundamental minimum of technical analysis, right? If the indices do poorly, so should stocks. It is what it is, right? Like I use the ocean metaphor a lot, right? You need the oceans to be calm. I don't care if you've got the Titanic. If the ocean is wild and filled with big waves and icebergs and this and that, it's game over. But hey, if the ocean is calm, the ocean is flat, we can take our little dinghies out and go deeper and deeper into the ocean, right? So to me, it's a little scary that the indices are as choppy as they are. On the flip side, for this specific sector, look, I sincerely believe that silly stocks do really well when the indices are bad. All the really serious ones, all the real good ones, the blue chips, the ones just below the blue chips, the teal chips, I have no idea, I'm making that up, right? But you get what I'm saying. Those suffer the most, right? this is kind of the moment where like a little silly stock can kind of just make a move because everything else is suffering and all the volume kind of pours in, right? That's a lot of the theory of this. All of a sudden, boom, no one like this is the whole day, right? This nobody care, nobody care, nobody care, nobody care, boom, right? So maybe there's some silly stock setup going on here, right? And I do think that's a little bit of something. And then I'll talk about the upcoming earnings here, all right? So excited about this one for sure. I didn't even talk about HITI in the opening thought, so I got a bunch of stuff on that one, right? But before we do go any further and I give you more of my thoughts and opinions, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There is only one up here. Maybe I'll draw a couple. I don't even think I will, but there are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can, please subscribe to this channel. Share this video online with your friends. Comment good or bad if you disagree. Look, anything you can do helps so much with these YouTube algorithms. But for real, just being here, giving me your time, oh, I'm so grateful for it, all right? My cats are extra fluffy. I think I sound a little congested, so I apologize if that's the case. So, look. I'm going to focus on Tilray right now, right? And obviously CGC shortly, right? What I want to do is I'm going to show this 15-minute chart. I obviously talked about it a lot in the opening thoughts. I'll say it again. This entire daily candle view, the entirety of it, right? The big volume, the running to that, the coming to that, like that all happened in 15 minutes, all right? When we look across the rest of the sector, all right, there was a little bit of a similarity, but not too much. But CGC had just a little bit of it. All right. When we look at ACB, this one kind of had a little bit, I would maybe even arguably say a little bit more than CGC. I don't think either had the candle reflected, right? But at least the volume interest was there so far. When we look at MSOS, not really the case. In some ways, you can kind of argue it was a little better than Tilray because that one at least tried those 15 minutes before the third one instead of just that single pop, right? But yeah, MSOS, there was a little bit of an influx of volume for a little bit longer, I would say. Again, the candle doesn't reflect it as much. When we look at HITI, right, there was, but it really wasn't as pretty, I would say, right? Most of them were green. This one was actually a red one, right? And then, which one did I not look at? SNDL. This one you can see is actually a little bit bigger of a candle, and oftentimes I used to say it more, but like SNDL I feel mimics Tilray a lot more than most do. I chapter CGC with Tilray really because of the volume numbers on both, but yeah, SNDL tends to be a little bit more of a mimicker, and I think you can see it here a little bit more too, right? But the point was twofold, all right? Number one, I would be a little more annoyed if it was just a Tilray anomaly, okay? And look, you can still kind of argue that this was a Tilray anomaly, right? This was the only one that got significantly more volume than any 15-minute moment, right? There were a couple other ones that actually started a lot nicer and they basically closed just a little bit higher than that, right? But no, Tilray, last 15 minutes, smashed, right? And really, like I said in the opening thoughts, it was basically a 3-minute moment. I called it a 2.5 because I was a little bit of a silly candle right there, right? It was mainly those two. And then, yeah, the rest of the volume right there, right? But look, in my head, this is what there's a couple ways to interpret this, right? And I'm going to do the normal chart reader style, right? I think it's 2-part. Number one, hey, look, this is just a single candle, right? So I'm never here getting excited about the way up. I'm never here getting excited about the way down. And taking the extreme outlier of this volume on the 15-minute, the daily is just a solid candle. right? On the volume specifically, right? We've been kind of living at that 50-day line. We've had a couple more peaks the last few weeks. But yeah, this is definitely the second best, maybe arguably third best volume of the last like 2 months, right? So I'm not trying to undermine it, but it doesn't look as loud when we look at it on the daily, right? Also, when we look at the daily, I'm basically seeing us, since this earnings gap down, struggle to get over the 8, struggle to get over the 8, right? There's been a couple moments where we try to peak to the 20, try to peak to the 20, and again, we try to peak to the 20. That's common. You can see it here. It's a little bit more pretty here, I would say. We finally get over it, but then we kind of come and like maybe even pretty wasn't the word, but like that's common struggle with the 8 and the 20 moving average so far, right? So the one thing that Tilray does have to its advantage, I'm sorry to zoom in and out so much. I hate when I do that. I actually like the spacing between these 5 lines. All right. In the beginning, I kind of said, I don't think I'm going to draw new horizontals because really, I think these moving averages are the perfect horizontal. Look, to me, nothing will matter till probably 102. All right. I'm not going to draw that 102 line, but you can see that is the open of this February the 5th candle right here. If you can give me 102, maybe even a little bit more, because that's kind of what we wicked on Friday. Maybe even, okay, look, let's be real. If we use 50% candle, 104 is actually the number, and 104 actually gets us over the Friday wick. So I think if you can wait for 104, 105, that would really be a nice little place to call 117 the next target. This line is also an interesting line right there too, 107. You can see it's basically the bottom of that one and the top of that one, right? So I think between 105 and 107 is kind of that risk reward kind of tolerance, right? But from there, I would say, well, the 50's coming down a little bit, right? So maybe 115, 116 if I had to guess. But yeah, from there, if you can break 116, the next place up would be 130, right? You break the 8, you go to the 20. I want to break both the 8 and the 20 to go to the 50. Then, hey, break the 50, go to the 100, right? I think it might be a little bit harder to go to the 200 or over it, mainly because it's coming back to the death line. All right. But I don't know if you saw it or not. Before earnings, we saw CGC make a real nice recovery to the death line. It had been weeks and weeks and weeks and weeks and what looked like longer, but instead it made a nice little recovery before earnings back to the line, right? That's where Tilray is. Tilray, and I haven't talked about it yet, but look, it's a new cool thing that this system does actually. Tilray is a couple weeks, it's not a couple days, but we're just before earnings. Maybe we can make a nice little climb back to the death line, and then we'll see what the earnings reaction does, right? Basically mimicking CGC, and again, why these two are chaptered together, right? But I'm not gonna overhype this 15-minute moment. And again, I like the fact that as we went through all the tickers, they all kind of had something in the last 15. So maybe there is a little bit of an interesting sector thing, but let's see what Monday does. Let's see if we can get over the 20, that 105, 107 zone, and then from there, I like the spacing between the lines, right? So, cool. I think that's Tilray right there. Spent a little extra time on that, but I thought it was worth it. Look, at this point, it's difficult to think about CGC. All right. I think CGC is very much going to need the sector to save it and or some big political headline. All right. I haven't talked about that in a bit. Look, I still think Trump is going to be good for this sector, right? I would have actually said the same thing if Kamala won. I thought she would have been good for this sector. I think both of them, this is just not an immediate priority, right? Trump is here for the next 4 years. I can't imagine year 1 he's going to do anything. I don't think it's a top 25% for like focus for him, right? I think as we get closer to year 2 and year 3, nearing the end lapse of his second term, right? I think that's where maybe he'll get a little bit looser and kind of start paying more attention here, right? But I think CGC is at a look. What I don't know, and look, as I go to the weekly and as I go to the monthly, I don't know where these two lines came from. All right. I actually am wondering if this was from an old reverse split. I really am not sure. But these two lines, I don't know. I really, really don't. Maybe they were from a daily moment, but there isn't even like I don't know. But hey, we happen to be right here, and you see the next one below that is 134. What I always say is once you lose the death line, you're going to lose 20%, then 20%, then 20%, then 20%, and so on, right? Ooh, excuse me. From that 160 to 130, that's basically 20%, right? Rough math, 15 is 30 cents. That's that 20% down, right? So the two lines actually still make sense in my head, but yeah, I actually have like the 134 specifically, there's no reason for it to be there. So I think it's just an old historical line, but yeah, really I have no idea. I see a 1 for 10 reverse split right there, so maybe that's what it was, but excuse me, nonetheless. Um, yeah, that's kind of the honest answer. In a lot of ways, the technical thoughts are the same as Tilray, right? If you can get over the 8, if you can get over that 178, excuse me, sorry, you can definitely make a move to 2. If you can get over 2, you can make that move to 250. Truth be told, I expect this to lose 160 and head to 130 unless that Tilray push helps the rest and maybe that 15-minute little volume here can continue as well. But like I said a couple minutes ago, it wasn't even as big as the opening push, right? So definitely a stretch to call it the same as the Tilray 15, right? Cool. I think that's it for this one. Let me know your thoughts. Let me know your opinions, even if you disagree. Let's come into high tide. I'm going to pause this real quick and drink water. Excuse me. Sorry about that. Oh man, sorry about that. It is my cats are super fluffy and I think I'm extra congested here. So high tide, look, I think there's a couple factors coming in here. Number one, we just came off earnings. You know me, I don't listen to earnings. I don't really pay much attention. What it does look like is the market really didn't love whatever Raj said, and we're down here, okay? I think the cool thing is we definitely are still over the golden line and we're still over the 200 moving average. I realize saying the cool thing is a little bit loose knowing that we were up at 350 and now we're down at 250, right? So I don't know how cool some would agree with that, right? But hey, this is still a lot better than just about every chart here, right? I think the only one that is now starting to become better is ACB. And look, I'm not trying to cover ACB just yet, but we actually haven't confirmed anything. That's only one line over the 200, and then none of those confirm. And at the moment, we're actually kind of creeping back down, right? So, oops, not HITI. There we go. So this is still the only one that's actually escaped all and flown, and this is actually still the only one that's over the line and potentially can use it as a support as opposed to actually, struggling to still try to beat it, right? So there is still some positivity to be said when we're looking at this chart, all right? I think it should be pretty obvious, but I'm obviously going to say it. If we lose the 200, that obviously means we've lost the golden line, and that is where things could get scary, okay? Excuse me. Listen, as I zoom back out, the 200's actually been used in this stretch. I'm going to zoom back a little bit. Give me a sec. Okay. So, not a lot of confirmation there. We come back, lose it, but we don't. Okay. Excuse me. Sorry. This is our first bounce, our second bounce, and we haven't used it yet. I would say up until here in this September climb, we were still kind of figuring out where we were with it, right? Well, no, that's not right. Because we go up, we come down, but then we kind of do break it and fly over there, right? That's at least enough. Okay, so we'll call that one. Oh, man. So this is what I'm trying to say, but it's not as easy to see it here and think it. Look, I sincerely, with any line, right? You can only use it so many times before it's gonna mess up, right? Not all lines are able to hold, but the 200 could generally hold a little bit more than most, right? This is actually a pretty noisy moment. This was a several month stretch of the 200 moving average not letting this fall below them all. And there was a lot of strength right there. what did the Dow Jones look like? Not that it matters too much. I mean, Dow Jones was doing good. I've definitely seen a lot of separation between the sector and the indice, but yeah, that was a very very strong use of the 200. From there, it's actually been a good long time since we've used it, and a lot might be arguing that's been a good amount of time to reset the line strength, right? If instead of holding right here and going and hold, like if this came back down, I don't think it would have been able to hold. This was too hard a thing, and that would have been too immediate a retest, right? I think potentially coming all the way here, which has actually been 1, 2, 3, 4, basically 5 full months since we've ever touched the line, maybe there's enough to reset on top of the fact that we have the golden line strength right there, right? End of the day, I'm going to just, that's that. What's the 50%? 240. If 240 USD is lost, that would be really bad, because from there we're going to mimic the rest of the sector. We're going to be below all five, and look, by no means am I starting to talk about deathline and this and that, but we've seen high tide. Look, I think that view alone, right? We've seen what high tide does when it's below the lines and not friendly with it, right? We've been not bad at all for a good while, and I'm going to say it one more time. There's a decent argument that 200 moving average has basically reset since the 1 2 3 I mean, yeah, 1 2 3 4 5 hits from right there, right? I think it could probably take another 1 2. I would say this, and it's, man, it's so tight. I would like to get over the 20 moving average. Maybe the 20 will come to like, yeah, 275, I think, is going to be an important line. Let's call it 277, because that'll at least get you to the top of this guy, right? From there, it actually looks like the 50 and the 100 are basically going to meet around 290, right? So from 275 to 290, there's not a lot of percent to be made right there. Maybe it's about 10%. It's about 20 cents, give or take, right? But I would really, really like high tide if we can get back over 3. Obviously, my line right here is up here. I think we can lower it to 307. That's 50% candle. Obviously, I just said 3 cents right there, which actually eyeballs to basically the top of that. I think between 301 and 307, but whatever your risk tolerance is, I think if we can get over 307, that's where we'll go back up to basically 4 right there. Beautiful red, 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 green, green, green channel, right? Starting to become a lot of moving averages. Hey, maybe the Tilray peak can help. This one actually did get a lot of volume, especially comparatively to the open, and the volume was growing, growing, growing on this one as well, right? Even Tilray, you don't see it on the 15, but on the 1 minute, it goes up and then kind of comes back down, right? So maybe high tide can, like I said, just some sort of sector help with that volume flush would be great. Otherwise, yeah, I think a lot of it is the 200 moving average must hold. And again, it's a strong line. We've got the golden line there as well, right? Um, Look, we've basically only hit the 50 moving average line once. That's at 240, right? That was the number I just said. We didn't want to lose 50%, which was right there at 240. So it makes me feel like 240 should hold. And then let's see what maybe Tilray earnings will do good and help or something like that, right? So let me know your thoughts. Let me know your opinions, even if you disagree. Oh man, I went a lot longer than I was expecting. I don't want to say I'm going to go really fast here, but let's take a look at this bunch real quick. So when I look at MSOS, I mean, I think this is a perfect line right here. It's actually all about the 50 moving average. It's all about that red line right there. Basically, that 50 is going to continue coming on down, and I think that's going to shape up pretty well with that. I'll just go ahead and raise that to here. I think that's going to be our money line here. If we can get into 370, all of a sudden I'll think about retesting maybe a 490. And hey, that's a little bit indicative of what CGC did. The same thing I actually said with what is it called, with Tilray, right? When I look at MSOS, I'll look at a couple of the actual MSOs. We'll take a quick look at Curaleaf, a near mimic of MSOS, right? It actually looks like it's tried a little bit better to take the 50 moving average down, which is at least nice to see. Um, I think that's going to be our money line. It's funny. Some tickers, I don't even get a second decimal. This one gives me a bunch of them, right? Hilarious. I think, I think a buck 60 is going to be the number you're going to want to break here. What are you? I think between 155 and 160 is what we'd be looking for. If you can break that, I think that could be a nice red, 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 green, green, green at $2. Again, exact mimic of what is it called? MSOS, right? When we look at Trulief, True, TRUL. Oh, there it is. Sorry, duh. Exact same thing. 50 moving average, right? Basically, that's a little bit tighter, but yeah, I think $5, 505, give or take. When we look at Cresco Labs right there, sorry about that. Same thing, right? So that's the theme with MSOS. All the MSOs are basically battling the 50. As we start to see them win, we'll go up. If we don't, obviously, same comments, right? We're below the death line. We're actually looking at all-time lows. And yeah, you lose 20% after 20% after 20%, right? I don't want to be under all five moving averages ever, right? And I don't want to be under when the Dow Jones is starting to scare me as well a bit, right? So just be careful, all right? Just we got to get over the 50 on MSOS. With SNDL, listen, I think the big thing with SNDL is, can it take advantage of that volume like Tilray? Okay, I've always said that I think SNDL mimics Tilray the best. You can see that right here reflected on the volume. The problem is, though, there's still a lot of moving averages. We're still under all of them, right? It looks like that was a pretty good support line that I drew a while ago, but yeah, for me, I care way more about these moving averages, right? We really got to get back over 182, 183. I think if you can get over at least 182, you'll be over that cluster and have a decent shot to make your way into the 190s. From there, you can make your way to the 203s. Just like I said with Tilray, there's actually decent spacing. I'm not too sure we're going to get over the 200 moving average. It's actually the same thoughts with SNDL. This is a tougher cluster, but if you can get over that, there's a nice spacing to that and then a nice spacing to that, right? So let's see what Monday brings, and that would be the path I'd be looking for. ACB, surprisingly, is actually holding pretty well. It still has not broken all five moving averages. I realize it's been over all five for at least that little window, but that's the first one. Doji don't count. That's a good one. That's not confirmation, and all of a sudden we're right here, right? So as long as we can hold that 545, this is actually really not a bull. I mean, this is a bullish stock. It really isn't that bad. I would basically love to get over that 633. Get over 633. I think the better line would arguably be 640, between that range, and then yeah, ACB hopefully can confirm and go. All right, let me know your thoughts, let me know your opinions, even if you disagree. Oh, I appreciate you so much.